You may be struggling to make your mortgage payments these days. Well, you're not alone. Inflation is taking its toll on everyone. I'm going to show you 6 ways to avoid foreclosure. Before I do that, I'm going to explain a little bit about the foreclosure process and the timeline. My name is Tom Day. I'm an agent in South Florida, and I've been helping people with their real estate problems since 2006. Florida is what's called a judicial state when it comes to foreclosure. Lenders are required to bring a lawsuit to force the sale of the property being held for collateral. The foreclosure process begins with what's known as a lis pendens notice. This notice becomes a public record. It's served after at least 120 days of non-payment of the mortgage has taken place, but sometimes it can take longer. Then, usually 1 to 5 months later, a court will decide the final judgment amount, which will be the mortgage balance, back interest, late fees, attorney fees, and court costs. If you owe more than your home is worth, this may not matter to you. If you have equity in your home, these fees can eat it up rapidly. So obviously, if you find yourself behind in your payment, you should be taking action to preserve your equity and good credit. So let's take a look at some of the various ways that you can avoid foreclosure. I'll begin with a loan modification. You can check with your lender to see if you would qualify for this. Essentially, the lender rewrites the terms of the loan with either a lower interest rate or lowering of the principal, or both. This may work if you've seen a reduction in your income, but not a complete loss of income. A word of caution about loan modifications: if you don't continue to make your new payments on time, the lender can revert back to the old terms, including any principal reductions that may have been given. Next is forbearance. We heard a lot about forbearance during the pandemic. Even without government intervention, a lender may agree to suspend your mortgage payments for a period of time if your hardship is more of a temporary situation. The suspended payments would then be paid back either in a lump sum or an additional amount to your regular payment, or pushed back to the end of the loan. Make sure that you understand the consequences of whatever option is offered to you. Another alternative to foreclosure, it's what's known as a deed in lieu of foreclosure. In essence, you, the borrower, voluntarily give up the property to the lender. The hit to your credit is less than foreclosure, but it's still substantial. It also keeps a foreclosure out of the public record. This option isn't a lot better than foreclosure, especially if you ever want to buy a home again. It could include some kind of relocation assistance, commonly called cash for keys. If it doesn't, then this probably isn't the best option for most. Next, you could file for bankruptcy. If you find yourself with a lot of other debt in addition to your mortgage, you may want to consider bankruptcy. There are 2 types of bankruptcy for individuals. There's Chapter 7, which liquidates assets to pay off the debt. And then there's Chapter 13, which allows you to keep your home, car, perhaps other assets, if you have the income to support a repayment plan. A 3-year or a 5-year payment plan is set up that pays off some of your debts. Other debts, usually unsecured debts, can be discharged at the end of the payment plan. Attorney fees can even be included into the payment plan. Student loans usually cannot be discharged, but IRS debt is a possibility depending on how old it is. Consult with a bankruptcy specialist to see if this option is right for you. The next alternative to foreclosure is short sale. If you owe more than your property is worth, this may be the best option, even if liens have been attached to your property. It's up to an experienced short sale agent like myself to negotiate a reduction in the principal balance of the mortgage and have the deficiency forgiven. The deficiency is the difference between the proceeds of the sale and the loan balance. In more rare cases, if the bank didn't feel that there was a sufficient hardship on the borrower, the deficiency could be turned into an unsecured loan and still allow the sale to take place. They will likely offer relocation assistance in cash to help you transition to a new home. Yes, this has an impact on your score, much less than a foreclosure, and you can qualify for another mortgage in as little as 2 years. My final option may be the most obvious one. Just sell the property if there's equity there, regroup, live within your means again, fix your situation, and then buy again during better times. I've seen too many people hold on to a property they can't afford and lose all the equity they've accumulated because they're emotionally attached to the home, which is natural, but it can be very expensive. If you don't want to go through the inconvenience of listing your home, I'm partnered with a network of cash buyers that can close quickly or on any day you choose, regardless of the condition of your property. This is called our Express Offers program. You really want to do everything you can to preserve your good credit. When you fall behind on your mortgage, that will impact your credit substantially. A foreclosure will crush your credit score. When your credit score is low, everything in life is more expensive and your future housing options become much more limited. Once it's in the public records that you're behind on your mortgage, you will be a target of what I call bottom feeder investors, so-called investors that will try and take advantage of your situation. They will try and get you to sign the deed over to them in exchange for some cash, and they'll promise to take over the payments. This is called a purchase subject to the mortgage. This is legal, but sketchy at best, and will likely trigger a due on sale clause of your mortgage. They will then try and quickly sell your property for a profit. If they don't count on them making the payments. It will likely be heading to foreclosure from there. All right, finally, a good resource for you is the Housing and Urban Development website, HUD.GOV/counseling. There you can find foreclosure avoidance counselors as well. If you're local to Broward County, you can reach out to me. I'll leave my contact information in the description of this video. If you're outside of my market area, I'm connected to hundreds of agents across the country with equal expertise. I'm Tom Day. Thanks for watching.